What's up YouTube? Dougie Chong here. Welcome to today's episode where I'll be giving my thoughts and opinions on the decently new Wealthsimple Invest app. For those of you that don't know, Wealthsimple is a pretty new company founded in 2014 here in Toronto, Ontario, Canada. Their goal was to make investing easy for the average user. They also wanted to avoid the huge fees that big banks in Canada typically charge and to compete against the big six banks here in Canada. This is no easy feat because banks in Canada are heavily regulated. I will start this video by saying that I am not sponsored by Wealthsimple to make this video in any way, shape, or form. I also do not currently have a Wealthsimple Invest account, so please do your own research before opening one for yourself. I do, however, have a Wealthsimple Cash account, which is linked to the Wealthsimple Invest account. To make this account is relatively straightforward. It takes about 5 minutes. You need your SIN number and some other basic pieces of information. This account offers two-factor authentication, so you can rest easy that no one can access your account without the one-time generated password. After you make your account, Wealthsimple will ask you what your risk tolerance level is. The higher risk you can tolerate, the more reward you stand to make. This can also make your returns go down, so it depends on how much risk you are willing to take. It also offers unique options such as halal investing. This basically makes sure that your portfolio only invests in companies that are halal. So after you set your risk tolerance, the robo-advisor will create a portfolio uniquely for you. This portfolio is based on your risk tolerance and contains ETFs, which I'll link a video in the description below if you want more information, but they hold a group of companies instead of just one or two. Now I'll show the Wealthsimple growth portfolio that they publicly have on their website and show the performance it had from 2014 to about 2019. So as you can see from this graph, the returns over 5 years is roughly 39.6% or 6.4% annually. This is their portfolio with the highest amount of risk and the highest return. Compared to the average S&P 500 rate of 7%, this is a little bit subpar. Now I will show the contents of the growth portfolio. This is basically the ETFs that the portfolio contains. Going from this list, it is easy for you to simply recreate this portfolio if you wish to do so yourself. At the bottom of the page, Wealthsimple discloses that the MER for this account is 0.16%. The MER is simply the average of all the MERs of the ETFs in this portfolio. In addition to the MER fee, there is a 0.5% management fee. Now this 0.5% management fee is much less than the typical mutual fund, which charges around 2%. Wealthsimple will try to justify this management fee by saying they do something very sophisticated called rebalancing. All rebalancing does is make sure the percentage of each ETF remains the same on either a month-to-month or yearly basis. This is shown from the previous contents exactly what the percentage of each ETF they expect to hold. So, for example, if the ETF VTI is supposed to be 40% of the portfolio and suddenly the price just increases to make it 45% of the portfolio, Wealthsimple will have to rebalance it and sell about 5% of the stake to get it back down to 40%. I actually read an article that said that the company Wealthsimple was actually founded because the founder tried to explain this principle of rebalancing to his friends and they were simply too lazy to do it for themselves. So now I will show the conservative portfolio from Wealthsimple. This portfolio has the lowest performance of all the portfolios they offer. The conservative portfolio has a total growth of 18.3% or about 3.2% annually. This is less than half of the gains of the growth account for less risk. Has the same MER ratio and the same management fees as the growth account, but slightly different holdings. Looking at this conservative portfolio, it is important to note that Wealthsimple offers a cash account which offers 2.4% annually. This is much less risk for only a 1% difference from the conservative portfolio. So now that you know how the Wealthsimple Invest account works, I will also mention that they offer both TFSA and RRSP accounts. This allows your account to grow tax-free in the case of TFSA and to grow tax-deferred in the case of RRSP. Now, with any new company, there are some risks. Wealthsimple could go bankrupt, and then what happens to your money? Well, Wealthsimple is CIPF insured, so this insures your investments up to $1 million. I'll also note that Wealthsimple is not a bank. You will need to link it to a certified bank such as TD, Tangerine, or Scotiabank to transfer your money into your Wealthsimple Invest account. So in summary, if you want to make use of the features such as halal investing, or you want a completely hands-free investment strategy, Wealthsimple Invest may be the account for you. I do recommend, if you just want to put a little bit of work, to use the Wealthsimple Trade app, and you can completely replicate the accounts that Wealthsimple would create for you. I will leave a link in the description below, and if you use my link, both you and I will get $5 off our next trade. That's it for this video, guys. Thanks a lot for watching. Hope you learned a lot about the Wealthsimple Invest account. Let me know in the comments below, what do you think about the Wealthsimple Invest account? Will you be signing up for one in the near future? Thanks again for watching.